Hey folks, it's Simon here with your Tao Daily for market close Thursday the 24th of April 2025. So market has been chaotic this month, right? Month of April has really been chaos. This was when kind of the proverbial started to hit the fan. Big gap down here with a 6 and then another fall, and then we had the big 10.5% rally and a lot of chops since. But what's happened now is the S&Ps are knocking on the door of this resistance level. All right, this previous support level is now becoming resistance. That capped out the rally at this 10.5% up day we had on the 9th of April. That was the day the 90-day stay of execution was enacted on the tariffs. And we're right up, we're just a whisker below that level now. And this level, coincidentally or not, is the 50% retracement level from the all-time high to the April low. All right, so if the bulls can close above this level, all of a sudden things start to look rather more bullish for the market. If we look at the S&P 500 futures, I showed you this chart a couple of times in the last couple of weeks. We are knocking on the door of this median line from this pitchfork, and if the S&Ps can close above this level, that would represent a change in character from sort of more bearish to more bullish. Just as a reminder, these lines are actually upward sloping. Okay, so we're kind of on the cusp of going from a sell or rip environment to possibly re-entering a buy the dip environment. If we have a look at some other asset classes, let's look at the dollar. The dollar looks like it's kind of putting in a low. If we zoom out, you can see that it's sort of found support right where it needed to. This is the previous swing low. This red line is the 61.8% retracement from that swing low to the 2022 high. All right, so big technical levels, it looks like it's kind of claiming them. If the dollar can stabilize here, that will start to restore some much lost confidence. A lot of confidence has been eroded with the trade war chaos, Trump threatening to sack Jerome Powell. All of that is not good for confidence. So some stability in the dollar here is important. If we look at HYG, it's still below the 200-day moving average. Remember, this is the ETF that tracks high yield, junk bonds, high yield credit. It'll be the first thing to kind of fall away if the market is sniffing any kind of credit risk. And whilst it's not out of the woods yet, it has made some pretty impressive progress. Things were looking pretty dire down here. Okay, so markets at a potentially important inflection point here. And if we can break through, both on the S&P, looking at the S&P Futures as well, all of a sudden, I think that the tone and character of the markets could shift. That's what I got for you. I hope it helps. I hope you have a great weekend, and I wish you good trading.